Alright guys, this is the video I promised once we hit 200 followers. Today I'm going to break down my exact strategy, the only one, the one I use in every trade recap and every trade I take. No gatekeeping, no fluff, just the raw, and everything is for completely fucking free. Clean truth about behind how I find and execute high probability setups. So let's get started and let's get into it. The first thing, this strategy is called the multi-time frame refiner. I don't know, but I just found that name cool and I just used it. It's not based on something like that, but it's built around smart money concepts, but not the way most people use them. I'm not just looking for a breakup structure and calling it a trade. That's amateur level. What I do is to refine the setup across every single key time frame, starting from the daily time frame all the way down to the 1 minute, like you can see on the trade recaps that I do always. What I do is refine the setup across every single key time frame, starting from the daily time frame all the way down to the 1 minute time frame until I get the full confluence. So the next thing is how I build my bias. Here's how it starts. I open the daily 4 hour and the 1 hour. So let's do the daily 4 hour and the 1 hour. And I look for liquidity grabs, the fair value gaps, the SMT divergences, and the breaker blocks. And let's say I see price sweeping up a daily high into a daily breaker block and fill in a 4 hour fair value gap. Boom, I already know the market might flip, but I don't just jump in. I wait for 1 hour or 15 minutes to give me the breakout structure to confirm that flip. So the next thing is the session psychology. Next, I always time my trades with the sessions. I don't take trades just like that. I wait for the session opens and the session closes. So Asian session is a fake out. It's just a building liquidity. London session start to show its hand. And New York session is where the move happens. So I watch how price builds between London and New York. And if I don't get a manipulation into my zone, my structure confirmation, I don't touch it. That's literally, you can see that in all of my trade recaps. So the final refinement is, once I get the higher time frame confidence, I scale down to the 15 minute, to the 5 minute, to then the 1 minute. I wait for price to tap into my zone and give it an internal break of structure. Then I need a candle, close a breaker block, a 1 minute in fair value gap. I want all of that confluences to align up. If I don't see that, I skip it. No guessing, no FOMO, just a structure and prediction precision.
Okay, now stop talking shit. I'm going to now explain the full, I'm going to give you the full sauce of my strategy. No fucking hard talking or buzzy words like the other says, but I'm going to write you down the steps that I'm going to show you an examples for that. Are we ready? Alright, strategy. So the first thing is to look for the higher time frame trend, which is the bias. You're going to identify your bias, your daily bias, like you always see me in my daily bias videos or recaps. I always hop onto the daily time frame and start with the higher time frame to identify my trading bias. So the first thing is to look for the high time frame trend. It's going to give you the bias. Alright, now head on to the second thing, which is look for a liquidity sweep or a sweep of liquidity on the market of the highs or the lows, or the session liquidity, or the PDH and the PDL. And the PDH and the PDL are the previous daily highs and the previous daily lows. So look for a sweep of liquidity on the market or in the market, whether that is highs, lows, or a session highs or lows, or the PDH or PDL. To make it clear, the liquidity sweep is my the first thing needed to form my strategy. If there's no liquidity sweep, there's no setup, there's no model, there's nothing. The whole strategy is based on only one thing to identify every single move of the strategy, which is the liquidity sweep. It's needed for us to know where the price is going to go. So the third thing, which is after the liquidity sweep, you look for a break of structure on the lower time frame to invalidate the previous order flow. Hold on, let me type to you and then I'll explain. So after liquidity sweep, look for a break of structure on the lower time frame to invalidate So next thing is after the liquidity sweep, what I want to see is a break of structure on the lower time frame, which is I'm now identifying my bias on the higher time frame, which is the daily and the 4-hour. And what do I mean by the break of structure on the lower time frame, whether it be the 1 hour or the 15-minute, depends on the price action and the structure by that time or how price is built. The strategy is something adaptable. You need to get it, adapt it, and figure out by yourself, not just do this, do that, and you're going to no. It's never been like that. You need to figure out how to use it by yourself. If you don't know how to use it, it's not the strategy, it's not how the strategy perform, but it's you need to actually start working on it, backtest, journal. It's going to take you a lot of time and experience to go on with it and to get used to it. So the next thing is look for a retracement into the continuation confluences on the lower time frame, and most of the time I use this section, which is the retracement into the continuation confluences on the 15-minute. So let me type that for you. Look for a retracement into like the fair value gap or the breaker block or the order block or equilibrium or the CISD or anything like that. You have plenty of confluences, and most of the time it's on the 15 minutes. All right, the next thing, which is you need to look for a reaction from the confluences. So let's say price retrace back into the continuation confluences that you did right here. Like let's say price after break on structure right here, we back into the continuation confluences, which is the fair value gap or the breaker block or the whatever that is, and you need now to see the reaction from the continuation confluences itself. So let's say, we have a liquidity sweep, then we broke structure on the 15-minute, we wait for a retracement on the 15-minute continuation confluences, but then you need to drop down to the even lower, or to scale down to the even lower time frame to spot the reaction from this continuation confluence. So let's say this is the sweep of liquidity. Here we sweep that liquidity, and we have a fair value gap right here, and we have this breaker block right here. So, and also we are in a discounted price zone of equilibrium. So this one, we have the sweep of liquidity, which is right here. We have the break of structure on the 15-minute. We have the retracement back into the continuation confluences, which is the fair value gap and the breaker block and equilibrium. And then you need to look for a break of structure on the lowest time frame or the inverse fair value gap or a break 79% Fibonacci extension. So the next thing, which is the last thing, which is look for a break of structure on the lowest time frame or an inversion of a fair value gap or a break of the 79% Fibonacci extension. So this is the full strategy. The first thing, look for a higher time frame trend or bias. So let's say we are in an uptrend. All right, we are in an uptrend. This is an uptrend. I don't know how to draw, but and then what do I want to see? A sweep of liquidity. I want the price to seek down liquidity, which is, let's say, the session lows. Let's say, hold on. Let's say this is my session window. We have this London session, these London session lows, and we have these London session highs, these London session lows, these London session highs, and what I want to see, price seek down liquidity before it move to the upside. So my bias for the day is bullish. It's going to be bullish. Why? Because we are in an uptrend. All right. What I want to see next is price seek down liquidity, take out those London session lows, and then break the structure to the upside. You're going to see how it is going to break structure. You need to figure out by yourself whether it's going to be fair value gap right here that needs to be inversed, or if price build up, price action right here and actually do the break of structure. So let's say we broke structure on the 15-minute time frame right here. So we were in a 4 hour, we were on the daily time frame to know the daily bias, but then on the 4 hour we split on the London session lows and the London session highs, and then on the 15-minute we scale down to see the sweep of liquidity, and we confirm the sweep of liquidity by the hourly time frame. All right. So the hourly time frame, you're going to see it properly if there is a liquidity sweep or no. So then you drop down to, or you scale down to the 15-minute time frame to put on the break of structure on the 15-minute to know the continuation of the order flow. So let's say we have here a bearish fair value gap. Then what price did? It closed below the fair value gap. And what I want to see next is a retracement back into a fair value gap right here. Let's say there is a 15-minute fair value gap. After inversing this fair value gap, let's say this is an inversion. Fair value gap got inversed. We created another fair value gap within this zone, and price continued to rip up. And by the time you scale down to the 5-minute to look for even continuation confluences, let's say, hold on. Let's say we have this breaker block right now got created, and price reverse into the breaker block on the lower time frame, which is the 5-minute time frame. And then if you scale down to the lowest time frame, which is after all of your continuation confluence, like look at this, take a screenshot of this so you can, hold on, I'm going to give you some time to take a screenshot. Look for high time frame trend, look for a sweep of liquidity. The session highs, session lows are the highs of the 4 hour or the daily time frame, or the previous daily lows and previous daily highs. After liquidity sweep, look for a break of structure on the lower time frame to invalidate the previous order flow. After that, you look for a retracement back into the continuation confluences, the fair value gap, the breaker block, the order block, the equilibrium, or even CISD. Most of the time, it is the 15-minute. Look for a break of structure on the lowest time frame, or an inversion of a fair value gap, or a breaker block of the 79% Fibonacci extension is the last thing, and I'm going to explain it now. So let's say after the 15-minute retracement back into the continuation confluences, back after the break of structure on the 5-minute and the retracement back into the 5-minute confluences, like the breaker block right here, you scale down to the 1-minute time frame. The last time frame you're going to scale down is the 1-minute time frame, which is going to give you the entry signal. So let's say we have now a 1-minute bearish fair value gap. Hold on. 1 minute bearish fair value gap right here. What I want the price to see, what I want price to do is, hold on, هذه باش تقصها جست باش باهي لحظة باش نرجع تو لحظة بركة باهي يرجع 1 2 3. What I want to see is price on the 1 minute to even inverse this fair value gap. That means price close the candle on the 1 minute above this fair value gap to be invalidated, or what you can do is you set up Fibonacci extension, and here you can see this is the 79% Fibonacci extension. By the way, this is my settings for the Fibonacci extension. You can take screenshot and do it like me, just to spot out the 79%, which is going to give you when the market is going or when the structure is going to be break. So this is the 79% Fibonacci extension. You're going to wait for price invalidated or close above it, or if there's another, let's say those are three options, right? There's three options. One of them is going to take a trade based off whether it is an inversion of the fair value gap, whether it is close above the 79% Fibonacci extension, or if the 1 minute gave you some sort of breadth of a structure right here got created, you're going to wait for price to break through the structure. Let's say we have a break of structure right here, you enter, and then boom, you enter the trade. Where is your stop loss going to be? Most of the time you're going to set your stop loss below the liquidity sweep, and if that's not going to give you the best risk to reward ratio, let's say London session highs are right here, and in our case right here, which is the London session highs are right here, and this is not going to give you a good risk to reward. You're going to adapt by yourself. You're going to scale down to the 1 hour or the 15 minute to look for a low. Let's say there's a low right here. Let's say this is an hourly low. You're going to set your stop loss below the hourly low, and then your target will be the London session highs. Most of the time the strategy is going to give you 1 to 2 or a 1 to 1.5 at least of a risk to reward, and it's actually solid. Like for me, I backtested it and it gave me a 46% win rate, and if you combine 46% win rate to a 1 to 2 risk to reward every trade, is going to give you some solid results. Only if you know how to use it. If you don't know how to use it, you're going to suck at it and you won't take any profitable trade. And also one thing I wanted to mention, which is the most important thing in this strategy, the most important than all of the confluences and all of the things. Never take a trade against the trend. So let's say your daily bias or your 4-hour bias is bullish, and you see a sweep of liquidity like this one. Let's say those are the Asian session highs. You see the London session highs get sweep out the Asian session highs, but the overall trend is bullish, and you see the confluences like aligning. Like let's say right here we have the breakout structure or inversion of fair value gap, then retracement back into hourly confluences. Like never take a trade against the trend, because most of the time it's going to fake out and give you a false statement and you're going to get stopped out. And trust me bro, I got stopped out multiple times by doing that. So never take a trade against the trend. If there's no setup appearing aligning with your daily bias, do not take it and walk off with no trades on the day. The setup is not going to appear all day every day, and as well as the other models, there is no model that is going to appear every day and going to bang out profit on it. So there is a place where you need to figure out your psychology, because if you're a beginner, you need to literally build up your psychology, because I'm telling you bro, your psychology, as long as you say you're the best and no bro, you're not, and you're going to get wrecked on this market, because at some days it's going to look very dark, it's going to be very stressful, it's going to be like very sad and very depressed, and you're going to be on a losing streak, or I don't know, your situation is going to be very fucked up and you're going to be very emotional. So you need to start from now to educate your mind, or to build up your psychology from now, brick by brick. I'm telling you, psychology is the most important thing, not the strategy. There is a multiple fucking ton of strategies. I was about to sell the strategy, but then I realized that there's a plenty of strategies for free. Why would I sell my strategy? Like, that's dumb. That's quite dumb. I'm just putting it on YouTube, bro. For anybody, if you got benefit from this video, bro, I'm very fucking happy for you, bro. But I'm not going to explain the confluences for you, because you know there's a lot of information on that. You could look for other videos on YouTube. You can find, if you type in what is a fair value gap, you're going to see a video of it. You can ask ChatGPT, you can ask Google, you can ask whatever, bro. I'm not going to do that because I don't have the time. So I did the strategy, which is not going to see it in other place, because I adapted myself. I learned it from someone else, but then by experience I like adapted to my space, and I started figure out some things within my model and my style. So, or it's not how I got it, it's not how I use it, because by experience and by time you're going to see price in certain moves, and you're going to adapt it to your strategy. So if you take out the strategy, look how price is moving for you and try to adapt it. And by experience, bro, I'm telling you, experience and consistency and discipline is going to get you where you want to be in trading. You're going to be profitable if you know that you're going to be profitable. For me, I know damn well that I'm going to be successful and in trading in general, and I'm going to do everything that I told myself I'm going to do. So you need to do that as well. And if you don't have this belief in yourself, just quit trading and look for something else, because trading is going to ruin your life. Like, literally, I'm telling you, it's going to ruin your life if you don't know how to make good decisions. It's all about decisions, and it's all about discipline and consistency. So you need to learn how to be disciplined. If you are not disciplined in the markets, everything will look fucking ass for you. Maybe you got some beginner's luck in the first days, but then I'm telling you, after a year, when you're going to see yourself have a year of experience, and then go on to a losing streak of 2 months, 3 months, bro, like, listen to me, you will never recover from that. You're going to be very fucking frustrated. You are going to be very fucking frustrated, because after all of those days, after all of this learning, after all of this experience, now it seems like you don't know anything about trading. But no, keep on doing what you're doing and add some hard work. Keep it up and work even harder. If there's nothing happening, keep working harder. There's nothing can help you but hard work. Hard work and consistency, which is going to get you out of this situation. I'm going to give you my trading plan. The first thing, take only high quality setups. Take only high quality setups. Like, if you see the strategy is aligning with the bias and everything, take that shit. Manage the risk properly. Always manage your risk. Never take a trade without calculating your risk. There's plenty of forex calculators or anything. You can look for it up on Google if you don't know how to calculate the risk. Also, don't trade in a high impact news day. If you see FOMC or Federal Reserve funds or anything like that, you know, or CPI data, don't trade, take a trade, because it's going to be very volatile and it's not going to be aligned with the strategy. Next thing, don't trade with FOMO. Trade with FOMO. Next thing, don't force a trade. If you see a trade and it's not very aligning with the strategy, but if you want to enter it and you want to force it, it's going to be a loser trade. I'm telling you from now, bro. Don't take a trade against the trend. This is I already told you about it. Take only one trade per day. This rule is for me. I only take one trade per day. I don't know about you. You figure out by yourself. The next thing, I only personally trade two pairs, which are GJ and USD GPY. Next thing, trade only when your setup appears. Be reactive. This one is what I told you about it, to the price action. The strategy is not a to-do list. It's not do this, do that, do that. No, it's never been like that. You need to be reactive and adaptive to the price action, because price action is going to move and you need to adapt it and figure out by yourself how price is going to react, like based on your strategy and shit. Next thing, cut off your emotions. Cut off your emotions. If you trade with emotion, you're going to get washed out, so never trade with emotions. If you enter a trade and you know yourself you're emotional, set your TP and stop loss and walk off the charts and never look for it up again until it hits your stop loss or your TP. Then you can continue on journaling and analyze the market and backtest. Never trade with emotions. If you know yourself that you're emotional, just walk off the chart. Set a realistic targets based on the drawn liquidity. So never set your TP on a fucking 1 to 7 RR. That's not going to happen. Set it on realistic targets, like based on something actual solid in the market, like a session high, a 4-hour high, a data high, equal highs, like not, or equal lows, like you know how to set your draws on liquidity, bro. Your TP and stop loss is going to decide whether you're going to win this trade or not, because most of the time price could reverse from an area and never hit your TP or stop loss. So you need to be reactive and adaptive, and you need to know where to put your stop loss and TP. Next thing, be calm and don't rush. Always be calm. Take trades when you're cool. You see your setup. It's very cool. Never like, oh, I need to enter right now. I see your setup. I need to. No, never been like that. Never. You should never be like that. You should never trade like that. It's not the proper way how to trade. You're going to be emotional and FOMO, and it's going to get you sad and angry and ambitious and all of those emotions. So never trade with the music on, because you're going to be very emotional and you're going to be very energetic, and you never need to be like that. Next thing, be humble when you win, and don't be afraid when you lose. And actually you're going to know this and like actually know how to react off of this when you actually backtest, because when you backtest, you know there's going to be days when you don't take a trade, there's going to be weeks when you took a loss. There's a day where you're going to win big wins. Like, you need to be calm. If you took a trade and you won it, like, it's whatever you want to trade. It's nothing. It has given you any value. If you lose a trade, you only lost 1% of your account, so no need to even worry about that. One win can cover up two losses. So this is my trading plan. So take a screenshot of this. Those are my strategy and my trading plan, and that's it. So now I have just a message to new traders. So if you're someone who keeps getting stopped out or you're stuck chasing trades, it's not because you're stuck, it's because your plan isn't layered out enough. This strategy will give you clarity and confidence, but only if you follow it exactly. Discipline is more powerful than any setup. So now, if you want to go even deeper, I dropped 2 game-changing tools for you. My trading book, it's a trader's guide. It's not everything. It's got everything, like the psychology, the risk, how to calculate the risk management needed, the strategy. It has the strategy and how to adapt it like correctly with very precise explaining. I ain't got time for this right now, but it has also the confluences explained, and it has everything covered up about the prop firms and all of the things. If you want, just you can find it out on the description. So, and also my Notion trading journal, which is more important than the book itself. More important and way too cheaper. It's like $5, I think. I forget about it. So the Notion template journal that I personally use to track my trades, win and mistakes. Link will be down below in the description. So thank you for 200 subscribers. Let's keep rising, and thank you guys a lot for completing this journey with me. I'm going to go even deeper with you guys if we reach more targets on YouTube. That's it. If you found this helpful, drop a like, hit subscribe, and share this with someone who needs a clean setup in their life. More content, more knowledge, more growth coming into your way. So let's be 1% better every day, and peace out, boys. Thank you. I love you.